And here we go. And good morning, good morning, good morning. Welcome to another episode of Money Matters. My name is Nev, and of course, we're broadcasting live straight out of Providence, Rhode Island, where it's, well, winter. We have had our nor'eastern, and we've been dealing with the snow and salt and everything else. It is quite gorgeous, and who knows, we just might get white Christmas this year, but only time will tell. Now, we're not here to talk about the weather or Christmas, although we seem to be getting some beautiful gifts in the form of crypto, and we're going to be talking about that stuff today for sure. The biggest news of the day is what's going on with the self-hosted wallets and the new regulation that has been rolled out. Now, this is just a proposal right now, and of course we do have about 2 weeks or so to comment and talk about it and, provide sort of feedback for the authorities, but some of the sources tell us that that's irrelevant, that this rule is coming and it's not going anywhere. And of course, we're going to be talking about what does that actually mean for you and I. What does that mean for crypto projects as a whole? And what does that mean for the exchanges and the business side of the whole things? We also have some additional information about Bitcoin. Is the price going to go up? Is it going to go down? Where are we right now? Should we be worried or excited? Do you sell? Do you buy? What do you need to do? And of course, we're going to be taking a look at some of the amazing projects that are being built right now and launched and rolled out over, well, today and the upcoming days and weeks. So if you are thinking about, hey, what altcoins could I potentially get into, today's episode is for you. If you are Bitcoin or Ethereum hodler, hey, this episode is for you. And if you are in any way, shape, or form in crypto, this episode is absolutely for you. Even if you're just thinking, should I maybe get into this particular marketplace? So, of course, we're going to be taking a look at the prices. I do want to welcome everybody who's watching this live. Hey, say hello. Don't be shy. We might, we might just say hello to each other. And if you say hi, I will say hi back. If you are watching a replay, do me a huge favor, especially if you're brand new to the whole thing. Hey, subscribe to the channel. Do some commenting if you enjoy commenting. If there's a like button, hey, like it. If there is a notification button, hey, notify yourself. And let's do this. Well, good morning and happy Saturday to you. Boy, do we have news. And you thought Saturdays are boring. Who the heck knew? Hey, we did have that regulation. We thought it was going to roll out on Monday and Tuesday, Wednesday, Thursday, Friday night. It finally came through so that we have a weekend to talk about the whole thing. But before we get into that stuff, let's go in and take a look quickly at the market. Where do we stand? What's going on? Let's take a big picture overview, and then we're going to dive super deep into the FinCEN rules and how that actually affects you. Is it a good thing? Is it a bad thing? We're going to talk about all of that stuff. So right now, looking at the prices, Bitcoin is sitting beautifully at $22,948.86. It has gone up over the last 24 hours. It has kind of come down since I started researching. We're sitting exactly at 23,000 about an hour ago or so. We did come slightly down since then, but we are still doing quite beautifully in that market. Ethereum is also doing quite well at 651.98 cents, up 0.8%. XRP is currently at 57.75 cents, slightly down for the 24-hour period. USDT, well, is USDT. Litecoin is at $108.13. Bitcoin Cash is at $317.12. Link is at $13.85. ADA is at 16.6 cents. Most of the coins have pumped quite nicely. We do have some reds, but predominantly things are actually doing pretty okay. In a 24-hour period, we do have same token showing up 2 days in a row that is quite great, and it's GRT. It's the graph. It's not great, it's the graph. And so one of the things they have pumped 128.1% and 5.6% in an hour. This is a brand new project. It's not even 7 days old, which is why we don't see any sort of how is it doing. But I can tell you that this puppy currently trades at 43.72 cents. And when it rolled out less than 7 days ago, it started at 10 cents. So, of course, it has pumped incredibly well. And just in the last few hours, or sorry, in about an hour or so, it was at 33 cents something. Now it's at 43, almost 44 cents. Banana, B-N-A-N-A, I don't know how to call it, but banana is pumped 87.7%. It's the second sort of greatest pumper of them all. Pumped actually 180% in 7 days and 3.6 in the last hour. Zilliqa is in third position at 24.3% up. Maids 15.1% up. Vitae 13.1% up. So we do have some quite nice gainers, and it's a beautiful thing to be able to see. Uni is above $3 now at $4.16, up 11.5% in the last 24 hours and almost 40% in the 7 days. Aave is actually crushing 94.21 is a current price, pumped 10.7%, 25.4 for the week. So of course it's a very interesting thing because, you know, when Bitcoin pumps, everything else kind of stops and pauses, and then Bitcoin sort of pauses and you have alts that actually start performing really well. And we're going to be actually talking towards the end of the show of what are some of the alts that could potentially pump really well over the upcoming weeks and months. So stay tuned for that. And of course, we might have mentioned some of them. Actually, we have mentioned some of them. I can tell you that for sure. On the losing end of things, sorry, choked on air. Thanks, Mom. It's one of the gifts that I got from my mother. So thank you, Mama. Ampliford is the biggest loser at negative 4.5% down in a 24 hours, followed by Energy Web Token, EWT, at negative 2.5, and then EGLD is at negative 2.2, DCR negative 2. Honestly, y'all, it's an up market. There's not a whole lot of losers. Most of the projects are doing incredibly well, so congratulations if you have made money. And you should, because if you're losing money when everything is green, you are doing something grossly wrong. And if you're doing something grossly wrong, hey, I do invite you to join me on onedealaway.com. It's number one, dealaway.com. Sign up. You get a free, absolutely free, 100%, nothing to pay, no shipping, no handling, no nothing, no obligations whatsoever. It's a free Crypto 101 course. If you're a complete newbie, don't know what the heck you're doing, hey, join me over there. It's an absolutely free course. And I'm not talking like a 5-10 minute video. I am actually talking like 50 some modules that goes over everything that you need to know to get started in this beautiful industry. Now, if you're thinking about being a programmer, that is not what we're teaching over there. But if you're thinking about being an investor and hodler, that is definitely what you will learn in this course. All right, time to talk about this whole, what's going on in the world of crypto with the regulations and stuff. And I think it was important to kind of get started with the new sort of ransomware that is rolling out before we get into the FinCEN rules. I promise we're getting to them. I wouldn't miss it for the world. But FBI is issuing a warning about doppelpayment. Doppelpaymer. Who the heck names things? I mean, seriously. WannaCry was a much better marketing effort than doppelpaymer. But anyways, they are requesting huge sums in Bitcoin. And ransomware gangs are now harassing and threatening their victims, which are mainly private companies, according to a warning issued by a U.S. Federal Bureau of Investigation. So what they're doing is intimidation escalates. So they, of course, they go in and then, sort of lock you up. But then they escalated to rude language. I'm like, whatever. Yeah, I can live with rude language. And includes threats to send victims' homes if they don't pay the ransom. All right, that is a bit creepy. And they are detailing the doppelpaymer as a group of threat actors that often demand between 6 and 7 figure ransom in Bitcoin from their victim. In case victim fails to pay the crypto ransom, the group exfiltrates parts of the stolen data and makes follow-up telephone calls to the victims. And of course, they're targeting healthcare sectors, emergency education across the globe. So if you're a big company, that is something definitely to think about and consider. And you might want to privatize your phones. Although good luck with that, because they sell that stuff, and we're all getting all kinds of random calls on our phones. Coinbase is reportedly picking Goldman Sachs for its IPO, and we'll see how that is going to roll out. Now, it's finally time to talk about the much rumored FinCEN rulemaking, and it's here. It rolled out last night, towards the end of the day on a Friday. It was rolled out, and of course, people are tweeting about it all over the place. There's the good stuff about it, there's the bad stuff about it, and we're going to talk about all of those things right now. Key takeaways from one of the tweeters is that it could have been a lot worse. I agree. The cool part about it is that it does give crypto parity with cash, and we're going to talk about that in just a moment. But the rushed midnight rulemaking is undemocratic and potentially could open doors for the individuals to challenge it and for the rule to be overturned because of the fact that it is undemocratic. We'll see how that all plays out, and I will share in a moment of what that all means, as well as explain what midnight rulemaking actually is. So let's get started. The Financial Crimes Enforcement Network, which is the actual name for the acronym FinCEN, an agency of the U.S. Treasury Department, is actually proposing a new set of rules when it comes to the crypto and the self-hosted wallets. If a customer moves $10,000 or more in cryptocurrency in a 24-hour period, banks and money service providers are required to send data of the transaction directly to FinCEN. Now, this is the part that actually makes it a parity to the current regulation when it comes to the fiat. If you go to the bank right now and you basically deposit $10,000 or withdraw $10,000 or more, the bank actually does that. Some people know this, some people don't, but that is what actually ends up happening, and they're making it a parity right now, basically saying that the US dollar and your Bitcoin is exactly the same. This is actually pretty darn cool, because what this means is that more likely than not, now that it's fully regular, well, it's not quite now, we still have some time before this rolls out, but there's a high potential that the ETF could potentially come. If that ends up happening, it's kind of cool, because what it's going to do is going to legitimize crypto even further. And I know this is sort of painful right now. There's a lot of pain for the exchanges and for the custody sort of businesses that exist out there. It's potentially sort of annoying for us as users, but overall, it's a huge positive, in my humble opinion, for the whole crypto space. So it's sort of like a trade-off. The rule also mandates that companies keep a record of all transactions sent to private unhosted crypto wallets if the transaction is worth $3,000 or more. Now, of course, they're also saying that they're creating a rule to prohibit structuring, which is defined as an attempt to break down large sums of cryptocurrencies, such as Bitcoin, into smaller transactions to avoid reporting requirements. So basically what this means is that, say you did want to transfer $10,000, but you didn't want the reporting to go in, and now you have like 7 different addresses, and you break it down, or whatever. So they're saying, like, you can't really do all that. The proposal seeks to establish appropriate controls to protect United States national security. This is basically what they're rolling out as the reason behind it. I personally think it's a BS, but they have to come up with something of why they're doing it. I think Moochie Boochie is just trying to sort of give another sort of like a last hurrah to the upcoming administration, likely being pissed off that he no longer can go in and screw around with everybody's money and finances. So that's kind of what I think is happening. I think he was sitting at one point sort of stewing over the fact that he's not coming back, he's not getting picked, the party lost, and there's that. So he was probably sitting somewhere by the fire, sipping on some sort of whiskey. And I personally think that if a government bought it, or if it was a gift, it was likely a very expensive bottle of whiskey. But if he bought it, I think might have been super cheap. I don't know. And in drinking his little whiskey sitting by the fire, I think he came up with the idea of like, how can I screw them over? Well, this is a good way to do it. And so he was likely sort of violating some sort of COVID rule without a mask, with a group of people all sitting, drinking, smoking cigars, and came up with this cockamamie excuse for a ruling. But of course, crypto lawyer and Compound General Counsel Jake Chervinsky basically called the proposed rule a terrible idea that could have been worse. And I agree, could have been much, much worse. They could have said like any transaction, like less than a penny, or whatever, like that would have been horrible. So this, it's pain in the butt, but again, it does give a parity to the dollar and to the fiat. What he's basically saying is that it doesn't require KYC for every transaction, which is quite lovely, but it's not the outright ban on self-custody. So we're still able to huddle our own keys and our own private wallets. But it is an awful rule, and there are 3 reasons why. First, it does nothing to accomplish its stated goal. Even if illicit activity was a major problem, which it isn't, this won't stop the flow of funds to bad actors. Look, y'all, just like they have that $10,000 rule for the, for the traditional money, right? Well, that doesn't prevent people from doing it anyways. We saw the FinCEN, FATFA ruling and all of that stuff and investigations that they have found. And, it was showing how people are using traditional banks. JP Morgan was actually listed as one of the banks that was financing all these wars and stuff. So people are still doing it. If they want to do it, they will come up with a way. And you know what? Cash is actually used way more, where you can transfer hundreds of thousands of dollars worth of cash, and nobody really, nobody can catch it, nobody can catch onto it, and that kind of stuff. So, I don't know that it's doing that. It just forces them to pay an extra fee to withdraw their own wallet first, and it doesn't give investigators any new information, because right now, what the new ruling does, it infringes on the U.S. citizens, and I think it infringes on everybody, because when U.S. does something when it comes to finances, the rest of the world, unfortunately, has to follow. They all kind of align with the whole thing. So it infringes on the U.S. citizens' financial privacy right. Today, law enforcement has to subpoena the companies to get information. The rule basically forces the companies to hand over information automatically, without subpoena, without anything. It also vague and ambiguous. How exactly can a company obtain and name a physical address of the owner of a non-custodial wallet? Like, how exactly do you do that? They just don't understand how the whole technology works around it. How does somebody prove that they own a private key to a particular wallet? What about non-custodial smart contracts, and who owns them, right? How does that work? Because you can send money to the wallet, but you can also send it to a smart contract, right? And then from that smart contract, you can send it to another smart contract. And do you see what I'm saying? Like, it's very complex, and so it doesn't really do much of anything whatsoever. They did give a public a 15-day window to comment on the rule, and unfortunately, the 15-day window for public comment on the rule is entirely out of order. The Administrative Procedures Act, APA, requires agencies to provide notice of proposed rules and give public an opportunity to participate in the rulemaker through submission of written data, views, and arguments. Regular order calls for an agency to accept public comments for at least 60 days for any significant rules. Often it can be even longer. The fact that FinCEN is given only a 15-day at the end of December on a Friday night, they're basically creating what is known as midnight rulemaking. What the hey is midnight rulemaking? Well, when an agency isn't giving public a genuine opportunity to participate in the rulemaking process, but rather trying to force it through predetermined results. Courts typically don't like that, and they don't take kindly to this, and midnight rules are often struck down under the APA. The new rules are open to public comments until January 4th of 2021. Of course, Muchibuchi is trying to force this out and roll it out into the ruling before the public can do much of anything and before the new administration comes in. Now, here's the interesting piece. When they roll that out, of course, there's going to be lawsuits. It's going to take a freaking forever, but there is a good potential that APA violation, courts could actually potentially overrule it. So really, only thing he's trying to do is, pardon my French, screw people and screw companies. Like, that's really what he's trying to do. That's it. That's it. It doesn't solve any of the things that they're saying is going to solve. And because they're not giving it a due process under law and rules that it needs, the only thing that it's doing is just really making a kerfuffle out of the whole thing. The new rule proposes the convertible virtual currency and legal tender digital assets be classified as monetary instruments and are therefore subject to the requirements for the Bank Secrecy Act, BSA. Here's the piece that is kind of interesting over here that I want to point out. This new rule, so when they rolled it out, they said, well, crypto is a legal tender digital asset and is classified as monetary instrument. The challenge with this, and kind of cool piece, and I think with them doing this stuff, I don't know if they realize that they're doing it, or maybe I am too stupid, but I don't think so. I don't think so. But what they're basically saying is they're saying, hey, crypto, IRS classified crypto as a sort of like an asset, right? And so of course then if it's an asset, then it's being taxed as an asset by you having to pay on any capital gains and that kind of stuff. The fact that now you have FinCEN and the Treasury coming in, right, which is, they're all interconnected, and saying, well, crypto is actually a monetary instrument, that means that crypto is a currency. You cannot tax a currency. You don't tax money. When, you can tax earnings, right? But you don't tax money. So this also opens up another sort of conversation and argument, in my humble opinion, for individuals to go in and argue now with an IRS to say, hey, you said it's an asset. These guys are saying it's a currency. You can't have both and eat it too. It's either a donkey or a cow. It can't be a cow or I don't know, whatever, right? Like, so it's one or the other. Which one is it? Make a decision and stick with it. And now they're trying to make it everything, right? So here is part of the challenge. According to the FinCEN, this target expansion is designed to stop illicit finance, which we of course know is not quite correct. And of course, it also highlights in particular that they don't like anonymity enhanced cryptocurrency or privacy coins such as Monero. So this is Monero keeps coming up again and again and again, and it keeps something that is being sort of tackled on and attacked in many different ways. Public comments with FinCEN makes clear that it's something of a courtesy. So even the attorney was saying, hey, this is not correct. They're not given the due right. FinCEN is basically saying, we know this is not right. We know this is not how it's played. And I'm telling you, this is just like a courtesy. It's kind of like, sure, give me your opinion. It doesn't really matter what your opinion is. I've already made my decision. This is sort of like going to the court, and the judge and the jury already made a decision that you're guilty, but we're going to hear you anyways, right? So they're kind of saying like it's a courtesy anyways. Quote, FinCEN has noted that notice and comment rulemaking requirements are inapplicable because this proposal involves a foreign affairs function of the United States, and because notice and public procedures thereon are impracticable, unnecessary, and contrary to the public interest. What? How is it that a law that applies to individuals is contrary to the individual's interest? They are taking advantage of being a small group that sat somewhere under, near a fire, drinking some sort of whiskey, likely probably very expensive, smoking Cuban cigars, and came up with the rule to screw everybody. Just because, they are in their 60s or 70s or however the heck they're old, and they were like, well, we only have 10 years to live, so who gives a rat's behind? Let's make it really horrible for the new generation to come in. So on one hand, they will tell you they care about you and I and the incoming new generation, but in reality, the only thing that they care about is themselves. Don't get fooled, y'all. Don't get fooled. They could care less about you and I and all of the incoming new generations that will basically be living off of this stuff. Wyoming Senator-elect Cynthia Lumens tweeted, leadership of Secretary Steve Mutchibuchi was going about the changes in all the wrong ways. Treasury's rule will also likely be adopted without public comments under an often abused portion of the Administrative Procedure Act. And yeah, it's all wrong, and it's going to be interesting how this is going to play out. In my humble opinion, it's just going to make it a bit more painful, and we'll see how it's going to play out. Norway, from what I have learned, is already has a similar rule to this, and basically what ends up happening is you take one of these puppies, right, and then you screenshot your wallet and you send it over to the exchange, and you're like, all right, that's that. Right, but screenshots, and here's the part where regulars just don't understand technology. Anything that you see on this screen, for example, this screen over here, which this is horrible for me to say it, but if you're a programmer, you already know this, so I'm not giving you anything you don't know. And if you're not, you're going to learn something incredibly important. I actually can go in and change whatever I want on this page over here, screenshot it for you, and send it your way, and it's going to come as something completely different. Don't believe me? Let's try this. I have never done this publicly or live. I gotta grab my keyboard, and we're going to come into this stuff, and the post title right over here. I can actually go in. Let's see, and let's see. I'm gonna change it. Bitcoin price. Let's change it. You see that it says, did Bitcoin price just see a retail FOMO peak? I'm going to say, look at this. Here we go. Are you ready? Are you ready for this? Okay. Now I can actually kill this. And look at this. Did you see this? You see what I'm seeing? Do you see what I see? Let's stay with the Christmas spirit, y'all. But as you can see, right, like I have an ability to make changes. I can screenshot this, and now you're going like, holy mackerel, Cointelegraph is saying Bitcoin crashed. This must be news. This must be news. No, it's just the fact that Nev changed something. Let's refresh, and this is the actual thing of what it's saying. Did Bitcoin price just see a retail FOMO peak signal? This indicator says yes. As you can see, you can go in and change all kinds of stuff. And unfortunately, Muchibuchi and his cigar smoking crew, and I honestly don't know if they smoke cigars or drank whiskeys or something, but if I have no clue. It just sounded like a really good story. Anyways, as you can see, they don't understand this stuff, that like I can go in and change everything, screenshot it, and boom. And I just showed you exactly how I did it right here live on the stream for everybody to see of how people can do this. You can change the image, you can change everything in here. And now that I had refreshed, I lost my highlights, so there goes that. But what actually is happening with Bitcoin? Bitcoin, you know, people are afraid that this is going to crash the Bitcoin price, and it's not. Bitcoin is sitting pretty, still trading within the range, and this is actually quite beautiful of what's happening with Bitcoin. It's going a little bit of sideways. This is quite lovely. A little bit of a pullback is always nice and healthy. Then it's going to shoot off yet again, and I think we could still see brand new highs before the end of the year. And boy, what a beautiful finale that would be for 2020 and Bitcoin. So, what is happening with the Bitcoin? Well, the Binance Futures funding rate overtook their bid on December 18. And when that actually ends up happening, typically this indicates that the future markets is overheating, which raises the probability of a pullback. Now, of course, what is happening? Well, within the 2 days from December 16th to 17th, the price of Bitcoin rose from $19,300 to the high of 23,800 on Binance. It's a little bit less on other exchanges, but let's pretend with this. Following a 23% price spike, a 3 to 4% correction is relatively small compared to historical corrections after a major rally. A Bitcoin pullback was bound to happen as the futures funding rate surpassed 0.1% on December 18 across major exchanges. And of course, what ends up happening is that before, when we saw this happen on the leading exchanges, we went from like something like 19,000 all the way down to 16,000. But we're not seeing that. And even though a 20 to 30% pullback was likely at the time because the funding rate consistently remained high, this time around the funding rate has cooled down considerably fast, and as such the chance of consolidation rather than correction are much higher. This is actually very cool and very bullish, and it's actually quite amazing for Bitcoin. But Bitcoin did see fee spike almost 5x in 1 week as we've reached a new all-time high. If you know anything about Bitcoin and kind of how the whole thing works, you know that you have to pay the fee for the miners to kind of process that stuff, append it to the block. Blocks are limited in the whole spectrum of things. There's only so much they can fit. They're mined only every 10 minutes or so. So, there's like a little bit of congestion piece, which in my humble opinion, Bitcoin makes it for a great store of value, not necessarily for like a payment network and stuff. I think we have much better payment networks that are currently in existence and are being developed, and there's going to be like layer 2 and 3 solutions that are going to come to the whole thing that could make it. But the current system that exists is beautiful for basically holding your value, for hodling. That's it. And this was of course the reason why Bitcoin Cash and Bitcoin actually ended up splitting, because Bitcoin Cash believed that it should be easier sort of for payments, and the Bitcoin community said, no, I don't think so. We just want to basically hodl. In a matter of about 5 days, the average transaction fee for Bitcoin hodlers went from $2.71 on December 13th, 2020 to $11.09 on December 18th, representing a 439% increase. Right? So it's way more expensive now to deal with the whole thing and send it. With this rise, the cost of sending Bitcoin is dangerously close to the annual high of $13.15, which was reached in late October of 2020. However, the figure pales in comparison to the average transaction fee during the 2017 bull run, at which point Bitcoin average transaction was about $55 per transaction. That was the fee. The increasing fees are not a random phenomenon, and it has two essential explanations. Bitcoin price has reached a record high, so the dollar cost of a transaction tends to go up as the valuation of each Bitcoin token increases. So in number of Bitcoin, it didn't really change that much. It's the price of it that actually changed. Bitcoin is seeing more used and traded. However, the network has own limitations by design, and as more users try to send Bitcoin, transaction fight for place in the nearest block, and of course the more money someone wants to pay, the price is actually willing goes up, because we end up all competing for the same block. So that's kind of how it all works. The average fee will likely return to the normal levels within a few days. Ethereum prices are also going through the same thing. Ethereum has also felt the effect of Bitcoin upswing, and its prices have risen along with its transaction fees. During the peak of the DeFi fever this summer, the average Ethereum fee hit an all-time high of 14.5. On December 13th, the average fee was $1.59, and on December 17th, those numbers have spiked to $5.30. So it's not necessarily as huge, but it is definitely existing over there. Of course, this is it's worth noting that Ethereum is working on scalability solutions that will make fees a problems of the past, especially because they're moving now to the proof of stake algorithm and other layer 2 solutions. Bitcoin is not necessarily worried about that, although we are seeing some of the developments happening within the Bitcoin community as well that give us an ability to kind of still transact within it. And there are some layer 2 solutions on the Bitcoin space and network that sort of go in and allow for the transactions and some of the programmable pieces within it. But of course, Ethereum definitely is the king of programming. Now, we do have some additional news that I think it's very important for us to talk about that is incredibly bullish. The first piece that I wanted to share with you is the Swiss-based bank is actually rolling out their shares that they're going to go into the IPO. They're tokenizing them. I've been talking about the fact that this is going to happen and this is going to become normal. This is just the first company that is coming in. So thank you, Signum, for validating NEV. NEV just got validated on December 19th, 2020. Thank you very much. The Swiss-based Signum Bank becomes first institution to tokenize its share prior to public sale. So what's going on? A big crypto-related bank based in Switzerland known as Signum was just recently tokenized. It's shared on a blockchain in anticipation for an upcoming public sale. By using digital representation of shares and related legal rights and obligations on a distributed ledger, the platform can provide an alternative to traditional capital raising options such as an initial public offering. Signum is going to be the first financial institution across the globe to tokenize its own shares. And they basically said, quote, "We are excited to be the first bank in the world to tokenize our shares. This is an important milestone." And I agree. This is super exciting part. And this is the part where I was saying, like, look, y'all, it's all going to sort of meddle. Didn't I talk about that yesterday? I think I talked about that yesterday, and here we go. I didn't even know about this stuff. I mean, this wasn't published until, this morning. I mean, you can see it was published an hour ago, and here, refresh. I didn't change it. Okay, 3 hours ago now. So when I started rolling it out, of course, it was an hour ago, but as you can see, I've been up for a while. University of Glasgow employs blockchain technology to combat circulation of fake whiskey. Maybe this is the one that Moochie Boochie is rolling out. Boochie, are you rolling out fake whiskeys? So according to an official publication on Friday, December 18, University of Glasgow, Scottish University's Environment Research Centre, say that fast 5 times, and Everledger signed an agreement which will see the use of blockchain to track the provenance of rare whiskeys. They actually use researchers to use a radiocarbon dating, which helps to check the actual age of the world's rarest whiskeys, which can single out counterfeits. Back in 2018, they revealed that 21 out of 55 rare Scotch bottles tested were either fake or not distilled in the year they indicated on the bottles. And what they're trying to do is basically prevent the fakes. So they're going to use the blockchain to do this stuff. And of course, blockchain can solve this. It can solve this with whiskeys, with wines, with art, with cars, with luxury items, jewelry, diamonds, shoes, houses, you name it. It's solvable with the blockchain. Beautiful technology that is being gifted to all of us. And now you're thinking to yourself like, hey, this is pretty cool. How do I participate in it? Well, you start going in and hodling tokens. I don't know what to tell you. All right, we're about to enter an altcoin forest, an altcoin ocean of beautiful things that are happening. So, of course, you know about Bitcoin and Ethereum and, polka dots and all these different things. But there are some crypto alts that have a very good potential to pump really nicely in the upcoming days and weeks. And a top trader says these 6 crypto assets are ready to ignite after Bitcoin's big bull run. The question is, are you going to hodl it before it does it or after? Because you want to do it, you want to front run things, right? And you want to do it legally, right? We want to do it legally. We don't want to do it JP Morgan style. Sorry, I mean, they have been, it has been found that on occasion or multiple occasions, they might have front run things. So now it's our turn to legally front run things. Of course, none of this stuff is financial advice that I'm sharing here with you. Please understand that. Do not trade based off of what you have found out over here, what you have learned. And so let's get going. A prominent trader known for nailing Bitcoin's bottom in 2018 is calling for 6 altcoins that he says are poised to rally. YFI, Yearn.Finance, is high on its altcoin list. as it's mine, which is why I've been sharing with you some of the charts and stuff of what's going on, and I'm incredibly bullish on YFI. Trader expects YFI to end its correction and shoot to around $33,000. I think it actually could go even higher than that, because we're starting to see a higher lows, right? We're not seeing as higher of the highs quite yet, but it does have a potential to do it. So we'll see how that's going to play out. The second one on the list is a lending protocol, Aave. Aave is primed to surpass its all-time high of $94.68. And if you have been paying attention to when we rolled out and did some roll calling, I specifically given you the price of Aave, which is just few pennies short of reaching its all-time high and likely breaking it. It has formed a nice inverse head and shoulder pattern and on a 4-hour chart and began to reaccumulate and now trying for a breakout. And you can see the chart over here. You have this beautiful shoulder right down here. Then you have the head. Then you have the shoulder. It starts to go in and coil up. And boom, it's going to take off, right? So how exciting is that? The third project is Uniswap, which is decentralized exchange. Uni is going to print a 30-day high of 5.5 after breaking out from bullish universe in inverse head and shoulder pattern, which suggests resumption of the uptrend. So you can see again, very small shoulder, head, shoulder, boom. And this was, of course, taking a shot at $3.72. It is currently, well, I don't know currently, but when we read it at the beginning of the show, it was well above $4, which I mentioned as well. So here we go. Pay attention, pay attention. You just might learn something. The crypto analyst is also looking at an asset collateralization platform, Saffron.finance. The code or the ticker symbol, however you want to call it, is SFI. Kind of like San Francisco International, if you can't remember it. SFI. Using Elliott wave principles, he predicts SFI will climb as high as $760, which represents a growth of nearly 80% from its current price of $429. End quote. SFI is looking really juicy again here. Added to my bags. Clear 5 up and ABC down. I think it's rips this weekend. And we'll see kind of where it rolls out. But he was using the Elliott wave to actually take a look at kind of where we are and what could potentially happen. So we'll see. Pay attention to that one if you really want to. He also talks about this particular token called DEFO, DEFO, non-inflationary ecosystem DEF hold, which he notes is flashing strong technical signals after breaking out from bullish continuation pattern, and says it could go even higher and print beautiful candles. It's already done incredibly well, and of course it has a potential to do incredibly well as well. I don't know. You be the judge. Please do be very careful when you're dealing with these alts, because some of them might not have as great of a market cap, which means it's not as liquid, which means there's a much larger slippage, meaning that the price that you see and price that you get might not necessarily be quite exact. Last on the traders list is SAND, S-A-N-D, which is the utility token of blockchain gaming platform, The Sandbox. Of course, they are saying that there's a possibility of a breakout and a run up from its current value of 0.05 to 0.075. Sand is still coiling and gearing up for a breakout. Shouldn't be too much longer, in my opinion. This is, of course, coming from the trader, and he's, of course, indicating yet again a potential inverse head and shoulder pattern. You can see it right here on the chart, where we're seeing and this is a much longer term head and shoulders patterns, because you can see the shoulder in September, then we see a head or the inverse, right? Everything is inverse. In November, we're seeing another one here in mid-December. So this is going to be a much sort of a longer term potential for SAND. 2021 will be a crazy bullish year for the crypto industry, particularly for altcoins in the DeFi space. And I do agree. However, he warns, and I agree as well. Expect volatility. Do not expect that it's just going to go in one direction. It is going to go up. It is going to go down. But I think overall is going to be incredibly bullish. And of course, the best way for you to protect yourself in the whole volatility piece is, well, you got to take care of your risk. You got to manage your risk. Take some of the money when you make money, right? Take some of the money off the table. As I always teach in my courses, which if you're interested, again, you can get Crypto 101 course absolutely free, no shipping, no handling, nothing. Like, you just sign up and go. But what you want to do is when you put in the money, right? When you actually make money, you want to take your initial investment out. Your returns at that point end up being infinite. So that's a cool piece. We want infinite returns whenever possible. So that's number one. Number two component that is really, really important for you to understand is that you want to protect your wealth. You don't want to be like that guy that we talked about when he puts all of his money that he cannot afford to lose, which we don't do that stuff as intelligent investors, right? We put money that we can afford to lose, and our plan is not to lose our money. We put it in. You take, say, $1,000, say that that's what you can afford to lose. You put it in. When that puppy prints and now it stands, your thing stands at, say, $1,500, you take your $1,000 out and you let that $500 ride up or down, because it doesn't really matter. You no longer, your money is protected, right? So that's kind of how I want to do it. And then say that $500 rolls up to another $2,000. You want to take, again, some of the profits off of it and then let it roll on up. That's kind of what you want to do. And then, of course, when it comes down, a strategy is to actually then buy more. But you obviously want to be catching what is known as falling knife, meaning if it's in a free fall, you kind of want to wait till it sort of hits some sort of technical components before you just get in, because you don't want to buy something that is falling, right? Like, it's kind of like a buying Bitcoin at $18 in January of 2018, when we knew it was going to keep on coming down. So you don't want to do that component per se. In the final piece of super exciting news when it comes to Bitcoin and the projects, there is a new thing that is going live. It's called Secret Ethereum Bridge, and it goes live letting you and me and everybody else around to make any ERC20 into a privacy coin. How cool is that? According to their announcement from Secret Network blog, their new protocol named the Secret Bridge is now live on the Ethereum mainnet, and it is designed to create programmable privacy tokens out of ETH and other ERC20 tokens. A similar purpose that could function similarly to Monero and Zcash, right? So the part that is different is that the Monero and Zcash are private, and there's nothing that you and I can do to make it not private. This takes basically any projects and says, I want to make this puppy private. So according to the Secret Network, the bridge allows for the immediate conversion of supported tokens to secret tokens, SCRT, which are encrypted, and use them to make transactions with utmost privacy. The transactions and contracts that are made with it can only be viewed by its holder or anyone who is given authorization through a viewing key. This is really, really cool, and I really like this, because it's kind of like right, like when I encrypt an email and send it, right? It's not everybody can see it, right? But if I excuse me, if I send it to you, right, and I want our attorney, for example, to see it, then you can see it, I can see it, and the person that we've given authorization to view it can see it as well. This is really, really cool. What makes features different from XMR and ZEC, however, is that it is programmable like ERC20 tokens. There are 14 ERC20 tokens supported by the protocol at this moment, and from the tokens, user can instantly mint their own secret ETH, secret DAI, secret whatever, any kind of asset supported by the bridge. So not everything right now is rolled out, but they did roll out quite a few different projects, and this is really, really cool in my humble opinion. The next step that the secret network is working on is the launch of its bridge mining feature. For now, the plan of the team is to encourage users first to get used to the functions of the bridge. Bridge mining feature will allow function in a way that is much similar to other liquidity mining pools. They're also developing an automated market maker, AMM, to help provide liquidity for SCRT, right? Secret SCRT. Get it? Get it? It took me a while. I know. ESL. Secret Network is blockchain community focused on developing protocols that enhance the privacy of digital asset holders. So if we go into the CoinGecko, you can actually go in and look for SCRT, and you can see when I pulled it up, it was at 57.75 cents. Is it going to go up or down? Up or down? All right. Taking bets. Taking bets. In 3, 2, 1. Boom. 57.14. So it actually has come down. It is coming down, as you can see, it is coming down quite a bit, and it's been down in the last 7 days, but it has printed nicely, and so you can see it's a relatively speaking new project. When we take a look, it did have this beautiful cup formation. Unfortunately, it has actually failed to deliver on that stuff, so it could possibly go down even lower. It does have a relatively speaking smaller market cap. The 24-hour trading volume is only 286,565, so super low volume. Market cap is only 32 million. Really, really, really low market cap, but I really do like this project. The other one that I really like as well, that I didn't prepare anything for you, is the graph. The graph has done incredibly well. It has printed quite a bit. It's still a relatively speaking new project, and I do enjoy that one as well. So those are a couple of the new projects that I really am enjoying and liking quite a bit. Of course, this puppy right here, the secret, is a much newer project. So again, if you decide to play around within the altcoin forest, be very, very careful. Pay attention to what you're doing. Do risk management. If you're going to use Uniswap, of course, verify all of the addresses and networks and all of that stuff. Hey, thanks for watching. Thanks for being part of this. I hope you have learned something new. I hope you are excited as I am about the upcoming crypto projects. And, if you subscribe, if you put your notifications on, then I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only